Now, the other advantage of being in the program and opting out, okay, the penalty mitigation standards. All right, one of the things is they have to consider the taxpayer's history of compliance, right? And if you're in the program, you only had years of the same non-compliance you didn't know. You had to report your foreign income and report an FBAR. But if you're outside the program, and this is what people who are going to get caught with a soft disclosure, well, you've had numerous acts of non-compliance. Your own soft disclosure was one continuous act of non-compliance. So there's going to be people who've made soft disclosures, and their penalties will be mitigated. Okay, it's going to happen because the IRS is going to have the same, some of the same constraints. They can still threaten criminal charges, but really they need to sue still. So there's going to be, they're not going to assess everyone willfully, but that, inside the program, you're doing the right thing. If they don't want to punish people who are going into the program the way they said. They want more people to go into the program, even though they set the program up for people who engage in intentional evasion. They sort of realize that the program was set up incorrectly. They still want you in there. Now, there's some instances where you don't want to opt out when you otherwise could. Okay, and the one example is if your domestic income has questionable items. And I don't mean that you're necessarily doing anything funny, but you could just involve yourself in a mess that might not be worth it. An example is if you have heavy real estate investments with losses. That's really something the IRS likes to challenge, and there's definitely fodder for them to find areas of non-compliance. So you want to be real sure that your returns and your finances are in tight order before you do that. And that's definitely something you want to talk with your advisor about, whether if that makes sense. And also, this is something, don't forget to fight your penalty base. That is, you might not even have to opt out. Right? Opting out is if your penalty base is high and they tag you with some penalty percentage. But if you're able to keep that penalty low, then an opt-out isn't all that needed, and that you just pay a low penalty. This is the example we give. Let's suppose that you have a joint account with your father, and you are a signatory on that account, and the account is worth $500,000. Well, your father is in, let's say, India. And your father has been taking all that income and paying all the taxes on it. It's his money. It's basically his money. You're on the joint account, and you'll get it when he passes. So in that case, you have no unreported income. Your father already reported it. So you can't have the same income. Either your father reported the income, or there was some other income that's not there. So they can't double count it. So that's really a case where you would, in the first stage, is you want to say, whoa, this needs not to be included in the penalty base. While I didn't report the FBAR, there has been no tax non-compliance because it's someone else's money. So in that case, your other accounts might get down to $10,000, $20,000, and then it might make sense just to pay that standard amount of 12.5% on that. So just something and that's why it's also important. We think it's also important, the way the IRS set it up is that you want to go through your 906 first before you opt out. And we agree with that. That's how we were doing it anyway, that we wanted to fight the 906 to get that low as possible. That way our clients could make an informed decision on whether or not the opt-out would be worth it. As you can imagine, there is additional costs with it, as opt-out is an audit of all of your entire tax return for, usually it's 1 year, but it might be more than one. So there's going to be heavy scrutiny by somebody who is well trained. Now, was it worth it for our people who've opted out? Yes. Opt-outs have gone as we hoped, and we were hoping very optimistically as we were looking at things and we were getting together our strategies. We really thought that the opt-outs was a process. I know a lot of people aren't comfortable with them. We tend to be a little bit more aggressive. As long as we're in compliance, we're going to be as aggressive as we possibly can be. And so that's really the advantage of getting into the program. So we've really been able to get results that we've hoped for. Now, here's some food for thought for you. And this is something we were talking about the other day in a meeting. There's something known, and some people who we represent, it's just not FBARs they have unreported, but it's also some other foreign forms of 5471, and that's for a controlled foreign corporation. And this is something to think about, is that when we're doing these, our submissions here, did you know that the advanced international auditors are advanced enough to actually audit these? That the IRS has to use something called technical advisors. I mean, these are your tax geeks, and there's not that many of them. And this is the point, that 99.99% of the IRS can't understand the IRS rules. So that's sort of what they understand. What should be expected of you? And here's the thing, especially when you've come clean. The IRS itself knows that their own people just won't be able to understand everything. And so obviously that's true for taxpayers. So anyway, please subscribe to this channel, and then you'll be one of the first to know about Part 8 of our 2014 guide. And you'll be the first to know. And if you're looking to talk to someone about making a disclosure or maybe opting out, if you're having problems with your own OVDP, please call our OVDP hotline, 888-477-4258, or email info@irsmedic.com. And by the way, even though a solicitation to a law firm is protected by the attorney-client privilege. I don't know if you knew that, but you do now. So this is Anthony Parent of Parent LLP, the IRSMedic, and I thank you for watching.